I have today a very interesting person that is what you call an asset protection consultant, and his name is Joe Iovenitti. Joe, it's great to meet you today. I'd like to ask just a couple of quick questions to get to know you a little bit better and let the audience who sees this video understand exactly what you do and how they could benefit. So, with business owners, especially, you really are an expert with specialized tax incentives and you do audits of select vendors. So, it sounds to me like you're looking to reduce taxes and business expenses. And sometimes that's easier to do than just finding ways to make more profit. So, you're working that side of it as well. And I think you have some interest in helping people with lenders. Could you tell us a little bit about the tax incentives and the audits that you do?
Sure. And thank you, Mike, for answering that question. As business owners, we always are focused on making more money. However, while making money is very important, saving money is even more important. And the reason for that is when you save money, that goes directly to your bottom line. So what I do is I focus in on helping business owners retain more of their wealth and increase their cash flow. And one of the ways that I do that is through the business owner cost savings, where we use specialized tax incentives like cost segregation, which is the accelerated depreciation of commercial property. We use the R&D tax credit. If you're doing something innovative, something new, something technical, you'll qualify. And also, we use the hiring incentives like work opportunity tax credit. If you're hiring people, those people that you hire may be able to bring you a tax credit for hiring them. We also do the employee retention tax credit, which you may have heard about. There's about $2 billion in that pot by the federal government to provide relief to COVID impacted companies. And there's also another tax credit that's not very well known. That's the disaster retention credit. If your business lies in a federally designated disaster county for 2018, 2019, you also qualify for a tax credit. So those are some of the things that we work with so that we could bring our clients more money. And those programs out there, they've been out there, many people just don't know about them. And then at the same time, we'll do, go ahead.
I was asking, I would think that they're complicated, and that's the reason they come to you is because you can get them through the program and get them through in an accurate way where they will get the funding, as opposed to just trying to do it yourself and still run your business.
Yeah, it is complicated. Typically, CPAs won't do it because it's outside of their bandwidth.
Oh,
So we're
yeah.
a specialized company that does that, and we do it from A to Z. We take care of the whole process.
Oh, that's excellent. So the tax incentives, people don't always know what's out there. So you could certainly just
Yeah.
having a conversation with you, they're going to find that out. Tell me about the vendors, the typical type of vendors that there might be some expense reduction there. How does that work?
Sure. Yeah, we'll do audits of your work comp insurance carrier and your
Okay.
credit card merchant. We'll also look at commercial property tax records for business owners. Those are the top three audits that we do. And we'll go in and go through it. And for example, in a credit card merchant, typically we should get 2 to 3% back for the business owner. And again, it doesn't sound like a lot, but it goes directly to the bottom line. So it is a significant amount of money that should be saved.
Yeah, bottom line savings is
Sure.
extremely effective. You're
Yeah.
absolutely right on that.
Yeah. We'll audit the work comp insurance carrier, making sure
Okay, yeah.
their employees are categorized correctly. We'll look at a couple of other factors. There's a headquarters has a staff that does that, and they're experts in their fields. Commercial property taxes, we want to make sure that they're not being overcharged, and usually businesses are overcharged. So we have a national database. So we have pretty good feel for what is happening across the country. And we'll ask the
Yeah.
questions of the business owner to get a preliminary cost savings estimate. And if they like that preliminary estimate, then we'll have them sign up and work with our staff to see what we may be able to get for them.
There are upfront fees involved of hiring you, or does it work off the money that's found?
Yeah. On the business owner cost savings activity, it's all on the back end. and we take a percentage of the cost savings that are saved. Yeah.
That makes sense.
Excuse
So,
me, that percentage varies with the cost saving mechanism. But on average, my clients have gotten somewhere between 82 and 93% of the total cost savings amount that we've come up with. And what's nice about the firm that I work with is a total package. So we just don't look at cost segregation. We just don't look at commercial property tax records. We look at everything to maximize what we could put back on the table for the business owner.
oh, that makes it absolutely worthwhile to work with
Yeah.
you. Any business owner could be discovering they've got money left on the table that's theirs that they're losing. That's huge.
Yeah. Typically, the initial evaluation of the preliminary cost saving estimates doesn't take a lot of time. For example, we could look at fixed tax credits, major tax incentives in 60 seconds with the question that we, and the platform that we've established.
So it may not take that much time to actually come up with the information needed to be able to move forward on the projects.
Well,
That's great.
let me be perfectly clear. It doesn't take much time to come up with the preliminary cost savings.
Yeah.
What does take time is typically for the business owner to provide the backup documentation for the values they provided us. For example, I'll talk to a business owner who has commercial property, and I have $5 million in a commercial building. Great. Then we would need a depreciation schedule. Sometimes it takes time to get that depreciation schedule, so that's where the process slows down. So typically, I try to ask the business owner, I know you're busy. Who could I talk to get the depreciation schedule? Take that off your plate, and I'll work it on the back end, and then I'll give you what the results are. So we try to work with the business owner to minimize the impact on their time to help them get the money that they can put on the bottom line.
That's great. That shows that you're personally involved with helping pull that information together to get it in the right hands that can find the savings. So you have a great team behind you. It's not just you're trying to do everything yourself. You've got experts in the different fields that bring the answers to the front, and you're fully confident that they'll save the X amount of dollars once they're through the whole process. You have some other things that you do, Joe. I don't know how related they are to the cost savings part of what you do, but the commercial loans business, things are getting a little wacky out there. So there's going to be people that have their bank relationships, but it's not working for them, and they need help. How do you come in and help the people with whether it's working within a private equity group or you're working with traditional lenders? But tell me a little bit about that, if you will.
A client would come to me and say, no, I have this project that I'd like to get funded. And we'll discuss what might be the best way to do that. I principally work with a group that does debt financing. And we'll look at the best ways that we could put a funding structure together to do that. The typical minimum loan that we do is on the order of $10 million. And
okay, that's good to know.
Yeah. And with the private equity group, it becomes a multiple line of credit. So if you put in a deposit, and I'll explain this in a moment, but if you put in a deposit of $10 million, we might be able to bump that up to a $30 million line of credit 3 times. That deposit that you put in place is not collateral on the project. It's just used as leverage by the private equity group in its own banking relationships with their bankers. And they're able to leverage that 8 to 12 times. So the private equity group shares some of that capability with the client. They're looking for a loan by giving them 100% bond guarantee to make them feel more comfortable that their money is safeguarded and is safe. The deposit typically goes into a tier 1 bank. And
this sounds really good, Joe, where those companies the private equity is basically mitigating their risk in a way that the borrower can feel secure. That's awesome. Yeah. I get it. I see where you're going with that.
And if I may, there's one other important thing that I want to point out. On many occasions, we can engineer a commercial loan. And what that means is that working with the deposit that you made with the 100% bond guarantee that we provide, which pays 5% a year on that bond. It helps offset the interest rate on the loan. And then depending on how you make the deposit, for example, if you made it as a U.S. Treasury note, that also pays 3-4% a year. So you wind up having a negative interest rate on your loan. You may even be able to make a profit after you pay all the fees and interest rate.
Wow, that's some great engineering.
Yeah.
That's music to the ears of a lot of entrepreneurs and CEOs that probably would love to have a solution like that one. That is for sure.
It keeps their money
You have
safe. They work with
get
other
the money
people's
safe.
money, and they may even be
Yeah.
able to make a profit on a loan.
That's
It's
crazy
unheard
good.
of, really.
Yeah, it's crazy good. You have a third area that I see about wealth preservation, and that has to do a little bit with deferring, well, capital gains taxes and how to position businesses to take advantage of that. How does that work?
Yeah, that's the third pillar of business. And there we defer the capital gains tax at the time of the sale for highly appreciated assets. And we're able to defer it for 30 years. And we have strategies on how to pay for it in the 31st year. Because we do not eliminate capital gains tax, we just defer it. So what happens is the business, the individual that's selling the asset has a time value of money. So they may be making more money today, and then they pay it in the 31 years from now, where the dollar is not worth as much.
Wow. That's a great strategy, Joe. What's the best way for people to contact you and set up a time? And how much time does it take to just consult with you? Is there any cost to that?
The free consultation.
Great.
Let me say that I'm a former business owner myself. I co-owned a geohydrological consulting firm. I'm also a geologist. And I became a business consultant in 2014 because I realized that business owners, there's a lot that they don't know that they don't know. And I wanted to help them in the area of retaining more of their wealth and increasing their cash flow. So I could be reached at 510-290-9247. You could also send me an email at JOEIOV, as in Victor, the digit 1 at outlook.com. So that's JOEIOV1 at outlook.com.
And then they could just request a consultation and then you'll find the time. But how much time does it normally take? What would be typical time that you would have a meeting? How much time
It all depends on what we will be doing.
Okay.
But
yeah,
the first step in all of this is educating my client, making sure that they understand. I'd rather have a client that's educated and be able to make the right decision, even if they decide not to go with any of the programs I have. But I want them to know about it. So I take the time and educate my clients. And sometimes, transaction may take months to work out because of the back and forth on the questions that they ask. But I want them to feel comfortable and make sure this is the right thing for them.
well, you're certainly building a strong relationship with them. That's for sure.
Yeah.
So that's what they can expect from you, Joe. I want to thank you for the time, and we'll get this out to some people who'll be highly interested in these three pillars of the work that you do that really save money on that side of the ledger and actually help them raise on the other side of the coin, so to speak.
Yeah.
Thank you so much, Joe. Have a great day.
You're very welcome. Thank you. Bye-bye.